Good morning, traders. It is Friday, November 29th. Taking a look at the charts, SP 500 trading slightly lower today, down about 0.2%. Nasdaq down 0.3%. Overall, having a little bit of a pullback after more or less. It's still the holiday weekend, but more or less going into the holiday, usually we see volume fairly light and higher prices, and that's what we've seen. And now I think we're going to start to see things shake up. I don't think it'll really happen today so much. I think next week we could see big volume step in. Big money players obviously will take it easy today, will be away or do very limited trading. I think everything would have been rebalanced going into the holidays, and the markets should close early today at 1 p.m. Taking a look over at the safe havens, bonds are set to gap trade lower this morning, and more or less money is kind of flowing out of the safe havens. Gold's down, silver's down, bonds are down, and I think the average Joe is still looking to pile in and buy equities at all-time highs in this overbought territory. When things are overbought, that seems to be when the masses are trying to buy shares hand over fist, and they end up paying a premium. So overall, we are seeing the bonds and the safe havens pull back still, but I feel as though that's coming to an end potentially next week with the market topping out after the holiday weekend. Now, if we take a look at gold, you can see gold continues to trend down this morning, relatively flat on the session. If we look at silver, it's down just over 0.5%. Again, still trending down and under the key moving averages. If we look at the gold miners like GDXJ, had a pretty strong pop last couple trading sessions, and it's stuck under the key moving averages, which is the 20-day and the 50-day moving average. It's also under this previous high over here. Now, I do feel as though we're going to see, ideally, I'd like to see the miners actually break below this 36 or these lows here. That would flush the market out. This is the 200-day moving average. If it could go down and pierce through there and tag that level, I think that would really cleanse the precious metals market and set it up for a strong recovery and potentially the kickstart of a new leg going forward. But until then, it continues to flag out, and we had a little bit of a false signal more or less popping out here. It's still holding its ground. It hasn't made new lows. It came down to test right close to these previous lows. But overall, it is still making higher high, higher low, but it is definitely trading sideways with the lack of momentum to the upside here. Looking over at energies, natural gas continues to fall. It is down 3.4% this morning, back down to the lows where we saw it happen on the day we exit our play. So we are seeing this down here, and we're testing those lows again. Overall, natural gas has had these nice runs and sell-offs, and we played both the rallies. We played some of this sell-off here for a 7% gain. Now we're going to let it try and carve itself out. We'll see where a bottom gets put in play. You can see there's a lot of volatility in here, much more than we saw over here and over here. Volatility, I mean large price swings, large price gaps, and that means there's some pretty big instability. So this basing formation that natural gas could potentially make is pretty big in this range that it's got. The bigger the base, sometimes the bigger the space or the move to the upside. So we're fine with this pattern, but overall, I think we could see some pretty big volatility and price swings in here. We got to let it find a bottom. Maybe it's going to work itself lower, and maybe this will be seen. Let me just clear the chart here. That this could be somewhat of a running correction, meaning the market comes down, and instead of putting in a bear flag, it chops around while it's still making lows, so it becomes a running correction, much like a bear flag. This would be the halfway point, and the second half would be somewhere down here. Hopefully, it would be above these lows. If we were to connect these lows here, we could see potentially this continue to flush down, find a bottom, and maybe put in a smaller type of bottoming formation over here for it to start to move back up for another run to that 3 and beyond mark. So we're just going to let it do its thing. We've played it really well this year, and we're just going to let it work itself out here. Big volatility, and it's trying to find a bottom. If we look over at crude oil, down 0.1%, continues to stair step its way up. It's in this rising channel. If we were to just go across these lows here and across these highs, you can more or less, it's channeling its way up, kind of working itself between these blue levels, sometimes piercing through, but overall it's got a series. It holds up, has a flush out, rallies back up, it's holding up. Again, we're getting to this point here where we could see this 59.60 area being the key resistance, which we talked about back when price was over here, that would be the ultimate type of hooker price up here where we could see some pretty big selling step in. The last time it got to these levels, if you're to draw a line across here, we've seen some pretty big sell-offs that took place that lasted several weeks. So we're getting back into this area where big sellers step in and they don't take their foot off the selling until it unwinds and gets all the way back down to the lower end of this range. Last but not least, we'll keep our eyes peeled on the utility sector. This is seen as a safe haven play. We'll see how utilities are performing against the SP 500, along with bonds and gold. And typically, we'll see utilities start to outperform and show they're a defensive play. We could start to see this move up. Now, overall, this is a nice bull flag formation. We've got the low, the high, and back down to this low over here. These are the potential targets that we could see the SP 500, or sorry, the utility sector run up to. So here's the first run, here's the pullback down to this low, it flagged out, and then here's the first target. Usually we see some type of pullback at the 618, and then we go up for the second target to the upside. So bull flag is the halfway point, and then from here we could see this move that we saw from here to here. We can see that happen again from here to here. That gives us that upside target. So showing some life on the previous trading session. We'll see where it goes over the next couple of days, but overall it is showing some nice bullish formation, and it is holding above the 20-day moving average. It's got a lot of resistance through this topping formation, but overall the pattern short term is pointing up to 63.82 and then 64 something up here, 64.80 or 64.50 area. Anyways, that's it for now, and I'll talk to you in a bit. Bye-bye.